What's going on, guys? How's everybody doing? As promised, I'm going to make a video of the market. Just kind of going over certain things that I'm seeing. So first and foremost, we're going to go over SPYs and some of the economic data that are coming out. And we understand that we have a potential war going on right now. Well, not a potential, probably is a war, depending on what you believe in. And we have inflation running hot, right? We have a lot of stuff going crazy right now. And this is a different market, right? It takes a lot of balls to trade in this market. So this is why, I haven't really been, trade like that. I've enter spreads and make sure that I have them on a quarterly basis or on a monthly basis. Not sure if we have ever seen this before. So we just have to really go slow, understand the market. There's a lot of choppiness going on into the market. First and foremost, we're going to pay attention to over here last week, which was the ending of March, the ending of Q1, right? Last week alone, as per Goldman Sachs, we saw about 18 billion of global inflows into equities. And we saw the retail bid is actually still very much so alive. But we did actually also see on the other side of the spectrum, people were actually being very precautious, right? People were actually being very precautious, but the risk is still to the upside, right? The risk is still to the upside. So right now we're gonna go over SPY and actually what I'm seeing from it. And if you guys actually could go to FinViz, you could go to Goldman Sachs and just kind of check the US equity fund weighted net leverage, right? And you actually see some really cool data, right? To see what is the volatility skew, right? The volatility skew, right? To see what most of the risk is right now. And the skew right now is too steep to the upside, right? People are paying a lot to the upside. And sometimes you could even go to the option chain and you kind of see that, let's say the option expirations for SPY, which expires, let's say, April 18th, right? Look at the calls, $10 away from where we currently trading right now. So 10 deviations, both up and down, and actually see what are the premiums. All the premiums to the upside are actually more than the premium to the downside. So right now, look at 447. If you were to check 457, they're at 80 cents. If you were to check 437, right, you can kind of see right now for that expiration date, more of the risk is to the downside, right? Which is kind of like a funny thing because the month of April is usually about a very bullish month for the market, which yields about 1.97%, almost about 2% for the month. So we'll actually see, but this time around it's quite different, right? It's quite different due to the fact that, we got the war going on, we got inflation, we got all these things. But people are still doing what they do best, right? Which is spending. But some of the data that came out last week, we also did see that the high spenders in terms of luxurious spenders started to actually kick back a little bit because it's getting way too out of hand. So if we look into July, let's look in July expiration, right? Let's look at June 17, let's look at that too. Right? Let's go over the option chain, look at the 447, 1492, look at the 437, 1172, look at the 457, which is about 934, right? Still very, very, very expensive. But so far right now, as we could see, most of the skew is for that expiration date is to the downside. So from the lows of 410, even from the lows of 420, we've seen there's been a lot of running to the upside. So it is perfectly okay and fine for people to start hedging to see if we actually go back to 430 432, which is my level that I start to get worried, right? My level. So as of, if it doesn't break that 430, I am not going to panic, right? Not going to panic. So let me see what else I could go over with you guys. Another thing we have to pay attention to is the 20-year, the short-term yield versus the long-term yield, which, you know, they turn negative, which people are actually saying that a recession is upon us. And usually whenever that happens, 12 to 24 months or 36 months after follows a recession. So we still have to pay attention. We've seen the move is very powerful. The yields on the higher, like the 20, the 30, they're not as unique as they used to be, right? The loan yields, they're not rising as much, which means that something about the economy, that's like some sort of a slow growth is actually coming, and investors actually wants to get paid for the short term. So which is why the yield on the short term bonds are actually higher than the yield on the longer bonds, right? But does that actually, you know, result in a recession? This time might be different, but given historical data, every time that happens, that follows by a recession. So it's a very hard time to be alive, but also one of the best times to be alive because we get to experience these things. The second thing, guys, when we look at technology companies and when we look at the certain dilemmas that's going around in terms of their valuation. Now, if you guys paid attention to the Fed's 1 minute release that was last week, which actually, when it came out, the Fed was a little bit too hawkish. Not a little bit, they were being hawkish, saying that they're going to raise rates. But the real question remains, will they raise interest rate? Now, one thing you guys have to pay attention to is the fact that, okay, during the pandemic, we needed help. We got QE, right? Quantitative easing, which means that print more money into the market, help the economy stabilize. Now we're going into an era of QT, which is the opposite of QE, which is quantitative tightening. Now the Fed balance sheet, which is approximately of $9 trillion, is set to decline to $6.5 trillion by the end of 2023, right? So that's another thing we have to pay attention to. You know, this is why we're getting those crazy move in the yields. Some of those big stocks, they're not even doing what they're supposed to do. Look at the Bank of America, still at 39, JP at 133. So I guess they still seeing that the Fed is not being as aggressive because of the war, because of inflation. So they do not want to send this economy into a recession in the state that it's in right now, because I probably, in my opinion, think that it would be worse than what actually occurred back in 2020. Now, the other thing that's actually in my mind that I'm paying attention to is the impact of China's lockdown on global growth, right? And inflation could be much higher than in 2020. So what if what's happening in China right now in terms of them locking down is our story now, right? What if? And remember, right now, a lot of economies around the world are already struggling with record high inflation. And the momentum in growth is actually slowing down, right? So we have to pay attention. These are all bad things that can happen, which could turn this bad boy around. And as we could see here, look how much Apple dropped. We're gonna go over all these stocks. Look how much Apple dropped on Friday. Look at Amazon. And Apple was just at 177, 178. Amazon was just at 33. Tesla was just at 1150 or 60. You know, all these stocks are seeing massive drops into it, in them. So we got to be careful, right? We want to pay attention to the biggest holdings in that ETF, guys. You have to pay attention to the biggest holdings in that ETF. So again, before we move forward, I also have to basically talk about the correlation between equities and cryptocurrencies. One of the reasons, again, I had went short, it was because I saw a fail for Bitcoin to break higher. And usually crypto has the move first, then equities follow right after, right? So as soon as crypto tapped out, 48, 47 recently, It dropped back to 45 again, and under 45, we saw the same thing from 461, and SPY dropped back down to 443. All right, we always want to pay attention to those things. It might be tedious to do the work, but it's most definitely worth it. And we want to know exactly what's actually going on, right? What's actually going on. What else should we go over? So, we have plenty of headwinds, right? Although we saw the labor market's doing okay, it's actually in par with what inflation is doing right now, and people are still out there spending money, right? Let me see how I can word this. According to Credit Suisse, right? They list about 7 longer-term bullets to consider moving forward. And that's what I've been paying attention to, been doing research about. Okay, so now unemployment is now below full employment, right? The Fed had to raise rates in order to slow growth below the trend. Now, in terms of QT, more tightening is expected. And they feel right now that the market is underestimating QT, right? Which the Fed will continue to be more aggressive as long as the market can take it. Because remember, they do not want this to go into sell-off mode, into recession mode, right? Another thing we have to pay attention to is companies' valuations, companies' PE models and stuff like that, which bring the conversation of earnings revisions, which literally just turned negative, right, so far. They reported that 29% of the time markets have risen in the next quarter when this happened. So right now, they actually given us a flashing warning signals, right? Which start with the conversation of a recession again with the inverted yield curve between the 2 and the 10-year, right? Which they see that it is a problem as profit share of GDP is very high and unemployment is below the full unemployment, which means right now, guys, the market is flat, right? It's flat, which is the reason why I use, give me a second, I'm gonna get that to you guys, which is the reason why I use the standard deviation in terms of, tracking, when the market is flat, what are people doing, this, that, and the third, right? And right now we're at the top of the market, right? The market is topping, and I wrote this down years ago, right? Reading the signals provided by the indicator depends on whether the price displays high or low volatility. Consequently, there may be the following alerts. When the market has a low standard deviation, indicating low volatility or inactive market, then a breakout price may emerge. If the standard deviation is high, signaling a high volatility market, then a decrease in activity is expected, right? Which goes into saying that you cannot have volatility and an equity or an asset up at the same time. One has to come down. 9 out of 10 times, it would be the asset that comes down. In the maturing bull market, you have the market tops and a decrease in volatility, which we're getting to quite the opposite. We have a market top, but we have an increase in volatility. Now, in the definition here, you have to use a longer time frames, especially for the technical analysis traders. Then you can determine if the maturing bull market is to go forward to the upside, right? If price tops are identified together with low volatility, then you get a maturing bull market. Hesitating traders, the market tops, increasing volatility. This is another circumstance in which we're right now. So we're identifying that the market has tops, but it has high volatility for a short period of time. We do not know what to do. Uncertainty, that's what we're going through right now. Inflation, war, what are they gonna do? Are Russian soldiers going to completely stop this and move out, right? Uncertainties, lack of traders' interest, which I don't think we're there yet. Market bottoms, decrease in volatility. So far it has been crazy volatility to the upsides. And this is just one of the things that I use to gauge in what's actually going on based on what some of these analysts are saying. You know, what are they doing? What are they forecasting? What model are they using, right? So the inversion between the 2 and the 10 is not a clear sell signal yet, right? It's not a clear sell signal yet, but it is something to worry about. Anytime, any day, something may just turn over. A bad news may hit the market, but we want to make sure that we're actually in the best position that we can be, right? So without further ado, I'm going to actually go over SPY right now. What am I seeing on the smaller time frame? I always like to use a longer time frame, keep your charts clean. That's why I use TradingView as well, to do all my other, technical analysis, whether it's the candlestick formations, chart formations, following trends, but just the basics, right? You have your charts, you have your volume, right? RSI, MACD, and I also use the standard deviation in order to try to gauge in what's going on. So one thing that I'm realizing right now, as speaking to you guys, I'm realizing that we have a short term on the 4-hour head and shoulder, right? It's a very discombobulated one, which, hold on, give me a second. You can move this right here, right? So we had this nice push. This would be considered an inverted head and shoulder too, right? Shoulder, head, shoulder, right? So to kind of show you guys, it's like an inverted, you see? This is a shoulder. So shoulder, head, shoulder. We need to break out above that 460, right? For a move higher, right? But we're not actually getting that right now, are we? Right? So what I'm looking for is this, right? We have a shoulder, and then we have one over here, and the neckline is over here. So under that 443, we can get a move to that 200 SMA, which is about 439, 440, which could even be much lower than that, but that is something that we have to pay attention to in the upcoming weeks, but also give the thinking that, okay, the month of April is usually bullish, but we're in different times right now. How can we hedge the position? Now, one of the trades that we actually went over last Friday, right, and which one of the members asked, was how can I play SPY? And the best way to play it, which we sent out, was in regards to an iron condor, trapping it above 455 and below 440, right? Because that was the range in which it needed to break after dropping this intensive move, right? It needed to break this to actually go to about 436, which is a 200 day. But we didn't have that. So the best thing to do was to trap it in between 455, call sell leg, and 440, put sell leg. That way, if it closed, which it did, we collected that entire premium. Right? But that is something I'm still paying attention to in the upcoming weeks, because once it breaks those lows of 443, we could have a nice move, right? A nice move to the downside. Beautiful move to the downside. So that is something that I'm paying attention to. And as you guys could see too, there was some sort of a divergence going on here. And I always go back to the basics, right? We saw a decent diversion. This is a bearish divergence. Price is moving one way. Momentum indicators moving the other way. And once it break that line, which was what? 452, 453, boom. We got to move to 444. Nice bounce, right? But this is the neckline of that head and shoulder. Again, let me leave it there. Just a second. Right? I don't know why it does that. Right? So this is the neckline of the head and shoulder. And then we're looking for a move down there. Now, we're in negative territory. If this thing keeps moving downwards, it might be problematic for us moving forward. So we have to pay attention to that. And let's actually go on the daily and see a bigger picture of what's happening. Now, the month is actually pretty bullish, guys, right? So which I still feel like, we can come back to about 430, 432, because again, that is where the inverted head and shoulder is. So come back to Papa. then actually pop back up again, right? That's what I would want done. But with me, the better move for me would be above these levels for me to feel comfortable would be over here. And the chart that I sent out on TradingView, the analysis that I sent out of TradingView actually states that this is where we tried once, twice, third time, and this is the fourth time we failed, right? But we had a pretty nice intensive move, so maybe it come back, sit on the shoulder. That's why I have these things here, 432, 434, right? Something more like this. See how it come here, bounce, all the way down, bounce, come back here, bounce. Beautiful head and shoulder, and then trying to actually retest the highs again. Or maybe do we actually break those lows and keep going down further? Right, that is something we had to pay attention to. So now we're seeing some sort of a market top, right? We're seeing the market top, but what's happening to volatility? Volatility actually is dropping, which could actually bring us into another bull market, right? Times are different, but again, so far we've seen the volatility has been crazy. Maybe the market sentiment is changing. People are more trading than investing nowadays. And if you build enough risk capital, you put it into investments, you're not really worried if you're one of those people. But what we're seeing right now, market seems to be topping, but we have a decrease in volatility. Now let's actually go on the monthly and see what's going on with that. Okay, well, based on this, right, we could actually come to the conclusion now, or make a thesis that, okay, volatility is still pretty damn high, right? Still pretty damn high. So we just have to really pay attention. So there might be more room to the downside. And what's actually alarming to me is the fact that we're literally at the center line of the MACD. We're not a neutral area, right? This was a nice sell-off mode. We actually saw when actually the MACD crossed the signal line to the downside, boom, we got a drop. Now, if the MACD can cross the center line, if we break that 50-day again, this is how far we might go down. Now, could this happen? Possibly not. But can we retest the lows of 410 or possibly go back to 400, 396? Most definitely. But depending if we go into another, I don't know, some sort of black swan event. I don't know, and I don't want to put that out there, right? So those are the things that we had to pay attention to. And what's most important too, pay attention to the VIX. I posted the video on Instagram when I seen that the VIX was actually coming down, and now it's at its lows again, right? The longer the base, the higher in space. Look how long every time it comes at these levels, it actually has a nice little pop. Recently it did that, came back down. If it breaks it again, right, above 24.25, let's pay attention to those things. But so far, so good, right? Look at the VIX. If we could have this actually cross below the zero line, we could have the market run even higher. But there are other things at stake here. Inflation, look at the dollar. All these things are going insanely crazy right now. Right, and crazy right now. And sometimes all it really takes is for you to take a quick look at some of the different sectors from a one-year performance or year-to-date performance, just to kind of gauge what's going on in your portfolio. A lot of these stocks are still down, but given the month return of last month or the past 3 months, right, they actually gained a good amount of percentage return. Look at this. Right? This is 3 months. This is 1 month. Look at this. Amazon still up 5%. Tesla still 22%. Like tech has been leading. Don't forget a little bit of financials, utilities, basic materials, energy too, real estate, of course, but tech has been doing what they do best. But again, we're seeing them at pretty crazy levels. It's volatile, moving, 10, 20 points in a week. Okay, so we possibly will go there. 1 day performance. Look, last Friday, this is what happened. So me, for instance, I like to look at, if I'm coming up with a watch list, I like to look at, okay, which one actually fell the most and the reason they did that. Right, look at Apple, 2% for the week. Microsoft, 4%. Google, 4%. Amazon, 5%. Tesla, 5%. What was green? Healthcare. Energy. So, these are the type of research that you can do just to kind of gauge what's going on, what happened, was it market condition, was it a specific catalyst dealing with that specific company? But we know right now in terms of market performance that they're more likely to be affected if the overall market is actually in a bearish stance. Okay, so now I'm actually gonna go over to TradingView, right? I'm gonna be real quick. I'm not gonna be too long in here, real quick. So what we're seeing here in TradingView is I always have my charts. I never remove them. So yes, I'm expecting the month of April to be a bullish month, but at the same time, times are changing. The war, inflation, the rise of interest rate, Fed's being more aggressive these days in order to battle inflation. All these things comes into play here, and we're actually seeing it, right? So one thing that I'm seeing right now is a potential double top in Apple that broke out of its range. Give me a second. So Apple broke out of its range, right? Very bullish so far, but we came back and got rejected at that same level here. This could be a double top, right? Come right back into the support level. 142 is that main level for me, but first we're looking at 156, 157, which it did retest on that 50, looks pretty strong. But another rejection is right in front of us, right? And this is the weekly. The monthly, consolidation at the top. Consolidation at the top. Another rejection yet again. How many rejections is it going to take? 1 month, 2 months, 3 months, 4 months, 5 months. So, and then we have earnings for Q2 coming up. Let's see how these companies are looking at. Look at their valuation, look at their profit margin. Is it contracting? Is it expanding? Look at M&A actions, right? So that's what I'm paying, attention to. And of course, the month actually just started. So we have a whole month to see what happens here. So I basically monitor this on a week-to-week basis, even on a day-to-day basis too. But this rejection is pretty decent. Right back to the 50-day. If we could break above, we could see 200 very soon, sooner than expected, right? But if we get rejected again, pay attention. If we break that 168, might be going back to 160, 157, right? With me, they got to break above their recent highs. The beginning of the year, if they don't do that, then it's an issue. Second, Microsoft. So Microsoft already broke its trend. I love to trade seasonality on stocks like Microsoft because it usually follows the trend, right? What you're seeing here, just like Apple did, broke out of the range to the upside, came back in, broke the trend, and now trading in a bearish sentiment, right? Bearish sentiment where 50 crossed the 200 to the downside, which is a death cross. And we're looking for price to come back to 263. Or can Microsoft get back in its range above that 315? We came there, we got rejected. That was a little gap we had to fill over here. Now I break a pretty key structure that had held for quite some time. The next structure level 265, right in between there. So right now, you know, we might be pushing up to the upside. There might be a great catalyst that could literally turn this thing around. But technically speaking, it looks a little bit bearish right now, right? It looks a little bit bearish. For me, I would want it above 317 to move higher. And you have pretty a good case here, right? You have, you know, inverted head and shoulder, potentially, you know what I'm saying? So could have a pretty good move up. You have a nice falling wedge here. It's coming back to test the wedge. Again, if you want to see what I'm talking about, guys, this is what I'm talking about. To test the wedge here at 291, that's why I have this here. And you could potentially have a double bottom, right? Or you can call it a triple bottom. 1, 2, 3, boom. Right? But again, it broke my trend, bearish signal, increasing in volume here. For me to go crazy bearish, 276 is that market has to break. Then I know it's on. But we're looking at right now, if it doesn't hold the 291 level, actually pop back up, we might be a little bit in trouble. Okay. Second one is Amazon. Same thing. My buy point will always be the same. 2,900. It even went further. Right? If we could get a move back down to 2875, which is a level that this is a structured level. 1 time, 2 time, 3 time, 4 time, 5 times, 6 times, 7 times, 8 time. That's a level that it keeps holding, even if it, you know, goes a little bit under. But this is a big consolidation, guys, since 2020. When does Amazon break out of this range? You're looking at 37.71 and 28.75. Nice little double bottom here, a triple bottom. A lot of stocks doing the same thing. And this is why I have these wedges or the falling wedge, whichever you want to call it. Look at this. If you extend it, this could be where it retests before it move higher. And again, what's actually lurking around the corner? Earnings. Earnings. A lot of people said these companies have inflated margin, profit margin. They're not real, they're fake. Okay, so we gotta pay attention. Let's look at our best friend Google. Same thing, break of a trend, bearish signal, earnings coming up. We do have the stock split. Yes, maybe Q2 starts in April, May, June. By July, we get a reversal. Let's see, this one's supposed to be a green month. Let's see, but we have so much negativity right now. Okay, break of a trend. Again, this is a pretty good support system here, but it doesn't look too strong. It's just a lot of consolidation where, you know, a market like this where it's very choppy could really hurt both bears and bulls. So it's best to actually play the spreads because you're gonna get that major consolidations. So you might as well pay for that premium and be able to stay within the range and still make your money. One I love to look at is Nvidia. Nvidia had a nice breakout, but I see it came right back. Look at this. In a matter of weeks, 328 was at 280, right back, just lost $50 move. That's the volatility that we're talking about. You know what I'm saying? That 200, this is the area in which I entered the credit put spread or the long call we've entered, made a lot of money in it. But come right back, the volatility is crazy. The volatility is crazy. Let me see if I could get, I believe it was this. We have it charted already. There we go. There we go. This was a beautiful trade, guys. And this was the move that I'm expecting. I'm still expecting to move higher, but it has to stay above that 268 for me to look for further upside. Until then, you know, if you took the trade here at 230, 231, right into 280, and then 260, should have got out. Right? So all those things is things that we have to pay attention to, guys. And this was the trade in the VIX that I sent out. And we know the VIX is a leverage BTN. So it played out perfectly, actually. It played out wonderfully. Look at this. It's a wonderful move. Double top pattern, which it took triple top to actually go. We have the top and tail, which it consistently did, right? You might be able to avoid nice, nasty drops. A lot of the reason people were buying was because they saw, oh, VIX gonna break above 30, then 47, then 60. As you guys can see, to cut off some of my calls was if VIX break above that 47.79, which it didn't. It failed literally at 37, almost 40. And then look at the massive drop. Now that it come down here to these levels again, okay, we might try to buy some more puts in terms of protection. So I might enter some spreads, some bear spreads in terms of protection. See, look how this thing is sitting right here. This is the neckline of the double top or the triple top, depending on what time frame are you looking at it. Can we actually get another break again? So that's what I'll be paying attention to. 25, my next level is $30, 30 and 62. Right? Another one we gotta look at the Qs. Look at the Qs. Look at the Qs, we did exactly what we did. And again, the Qs on the weekly is under at 50. We're gonna have to pay attention. It broke its trend. Above 383 is where I would really like it, but we're not there as of yet. But it's still sitting on the 20 on the monthly. My concerns comes if it breaks under 340, trouble. But as long as we're consolidating there, I think tech will be okay. So in my defense, let me move it under here. This is the level, 335, 334. If it breaks it, then we get to worry. Until then, these are the perfect spot in terms of playing spreads on a week-to-week basis. SPY did exactly as we expected. So a lot of people who follow that trade, SPY did exactly as we expected. And I put everything on the chart. There's a lot of lines, but it's very clear. I even put, you know, an explanation of what would happen. This is it right here. And exactly just that took place. Once you start realizing the pattern, you just start noticing certain things. You know what I'm saying? You start actually noting those things down. Now, one thing that I'm paying attention to on a weekly basis for next week is to see where the candle actually opened, because what we have right now could be a bearish signal. Could be a bearish signal, guys. Spinning top. Right? So I'll look for a break under that 443. This is why it's really important to me. And you guys could actually look that up. Right? Look that up. So if you guys go on the Discord to tier 2 in terms of education, give me a second, I'm gonna pull it up just to show you guys what potentially might happen. So you click on technical analysis, you'll be brought to a page like this, right? And it breaks down these things for you. There's a reason why they're there. Use them, right? This is not what's happening. This is not what's happening. Let's go a little bit more. This is potentially what we're seeing right now. The evening star is a 3 candlestick pattern that is the equivalent of the bullish morning star. It is form of a short candle sandwich between a long green candle, and a large red candlesticks. It indicates a reversal of an uptrend. So if we are going up, that happens, it could mean that we're reversing back to the downside. And this is a very tough area, right? And then one thing we have to pay attention, guys, it rejected at the other shoulder. We're under that 454, well below it. So we'll see next week what happens. That's what I'm paying attention to, and that's what you should be paying attention to as well, right? If we break that 444, we're then looking at 436, 437. So this is just a different chart from this one. This is why I take notes. I put the charts in and actually time how they happened. Look at this. I haven't timed anything from here, but I'm paying attention to, okay, can we actually break these levels here? But we just had a bearish signal here, guys. That happened on March 7th. Can we have enough push to the upside to turn it back around? This wasn't a very long time, right? Look how long since that happened. The last time that happened, we had a bearish crossover was in June of 2020. I mean, March of 2020. And right after that, we had a, in June, 3 months later, boom, push higher. Can the same story repeat itself? Okay, so look at the 10-year. Thing's been ripping, right? It's been ripping, and stock hasn't been dropping so far off, right? Look at DXY. It's ripping. We actually had that charted already. Let's actually see how it looks like. You see, everything coming true. It's at that rejection level. Can it break out? This has been a level since 2015. It's been rejecting. Can that be that level where it rejects? Higher rate, stronger the dollar, negative for stocks. But this is not the best time for that scenario to play out due to inflation. And now people are actually happy that the Fed is being a little bit aggressive. It's crazy how the narrative changed on a day-to-day basis. Look, some of our major stocks still trading under the 50-day on the monthly, still under 200-day on the weekly. Look at Facebook. Look at your other one, Netflix has much more room to the downside. This is the next level, 240 for Netflix. So we're looking over 100 points here. And remember, I said it here. This is the same thing that happened to Zoom, guys. I don't know if you guys remember Zoom, and it still looks to fall even further. Once it broke that 233, they had a crazy move to 133, which was $100. And it's the same move you should be expecting in Netflix. Easy trends, just to see where the trend is your friend, right? Look at Tesla. Tesla, this is a nice bull flag, falling wedge, retest of 50, continuation to the upside, back in consolidation mode yet again. A break above 1212, then yes. And then we got Block and certain like other blockchain companies teaming up together to mine Bitcoin. So pay attention to that. Square has been just phenomenal. This was one of our picks as well. Look at it, bounce on that trend beautifully, right? Beautifully. So we gotta really pay attention to those things, right? This is just a review of some of those major stocks that we either was in another one that we currently in is actually a firm. I'm waiting to see what this month actually closes. This was a pretty decent buy. We didn't get out, but I did sell some calls. This is why we're picking those shares like that, using the wheel-in strategy. Sell puts and sell calls against our positions. Another one we have to pay attention to is the BA. I have a feeling due to the fact that BA has break its overall trend, and it's been a hard thing to do. Once we break under 167, we're looking at 150, 142. This will be a pretty good buying opportunity here. So the safest thing to do is to be selling puts at that 140 level. Right, and just to sit patient and then, you know, be right on your timing and just wait for it. What else should I go over? Yes, Bitcoin. So with me, with Bitcoin, above 45,000 is what I really want. So I'm gonna see what happens in the upcoming weeks or so. Again, that bearish indication is actually coming here as well. Right, excuse me. That bearish indication is actually coming here as well. Bearish evening star. We have a little bit of volume activity. Most of the trading is taking place around here. So 40,000 is that mark of decision making. What's going to happen? That's what I'm really waiting for. So break under that, which is about 2,500 point move. I'm short Bitcoin. If you continue consolidate above the 50, I'm bullish Bitcoin. But you guys could see how this is a level of what nice little double bottom, might be a bullish month for crypto. But there's a lot of things going on right now. So you just got to be careful, do what the chart tells us to do. What are the buyers and sellers are doing and paying attention to the news. Let's look at the Nas. Under the 50 again, yeah. Tough time to be alive these days. Tough times. Right? But still holding its thing. Now, if you look at on a 3-month basis, it looks bad. It looks bad. A lot of these stocks looks bad. Look at this. It's under the last quarter close. This is on a quarterly basis. This is just showing you a different narrative. So the move 334 could be upon us in the next 3 months. So that will be on a quarterly basis. Quarter means 3, right? But within the trend on a monthly, weekly basis, you might have moved higher up. But look at the quarter. The quarter ends on a good note. Look how this quarter actually starts. And we're going into earnings season. Something to think about, and pay attention to the VIX on a quarterly basis. Looking to go crazy, right? You can see that consolidation here. It did that last time. Look at this move. That could mean the bearish case for the market, but who knows? I don't want to jump to conclusion. Look at the dollar. All right, you're looking at a top of 102 before the next major rejection. It's a beautiful double bottom here. Means negative for tech, bearish for stocks. Look at the 10-year yield. Insane. Can naturally keep running. Next rejection's around like 3%. Like they've actually wanted. Right? But at the same time, look at some of your biggest names. Look how much they've been rallying up. Look at BAC in terms of bank when it comes to financials. Look at JPM on a quarterly basis. They pull back pretty nicely, but still on a very nice uptrend. Look at WFC, Wells Fargo, right? Look at DFS. Nice little retracement here. Look at Ally Financials. This was a beautiful short that we had on Ally Financials. And I still think it comes to 35. Okay, now let's look at the Dow on a quarterly basis. Now, I'll tell you guys what, once I see the Dow breaks under these levels here, and I'll even put it under here too. So you're looking at 346 first, then, 339, 340. If the Dow goes under there, and you guys could actually see that coming too. This is why I trade the trends. We're trading, look at this, we broke the trend completely. We're trading under that. This is a nice bearish indication in terms of reversal, right? That was one of the, that was one of the bearish movements. Give me a second. Let me go over it again. See, this is the hammer. Let me show you the bearish ones. It's exactly what you're actually seeing right now. Not fully yet, but you got the hammer, right? So we're waiting for the rest of the move. Can it actually come? And we're seeing volume is actually being supported to the downside. Okay. So again, pay attention to these things, guys. Let me give you my prediction for next week on a monthly basis, even an hour. Let's see. I still think we get a move to the supply zone, to the demand zone of 444 again, but we might face some support around 446, right? But if we do break that level, 444, 443, if we break that level, well then 436, 437, right? That is it. And pay attention by Monday night, Sunday night, if Bitcoin break that 445 level, that 40 level, we're looking for a move back to the lows of 32, 34. If that happens, then equity should follow right after. You can pay attention to the US 30. Look at the 3 months on the US 30. Again, hammer. We have the hammer. We're just waiting to see how this quarter actually ends. This is something to pay attention to on a fiscal 12 months period. So we already went through Q1, we're in Q2. What happens here? If the US 30 breaks under these levels here, on the bearish standpoint, it's under 33,600, then that 20-day of 28,000 is near. Okay, so that's what I'm gonna leave you guys with. Last but not least, I'm gonna go over plug because I know a lot of people like plug. We had that insane run to the upside. Can plug actually hold these levels here? This is the quarterly basis. If they can actually hold these levels here, we could get another spike up again. But all these spikes are news driven, right? But it dropped, nice little double bottom here. Can we actually go test these levels? Let's see if we get some more momentum here, then we'll be good. The good thing that's on your side is that you had a bullish crossover that happens on the monthly chart, and it's holding that as support level. So Plug has a lot of great products, a lot of great projects going on, partnerships and things of that nature. It's actually wonderful. Another one is Jmia. With me, I feel like Jmia has reached its bottom, but I'm looking for higher bullish sentiment. But these dojis here, all points of reversal. So I'm looking for a move back to $18, $19 a share. Some of the lower names that we own, I just keep buying this right here because insiders keep buying their shares, right? There's a lot of great buying activity going inside that company. So I'm just following through with them. Orbital Energy. So that should actually come through. So especially when you're talking about, solars and things of that nature, EVs, this is a company that I'm quite interested in. Another one, uranium, energy fuels, had a nice break and still breaking out. Look at this, still expecting to move to 14 bucks. And that's when I'll actually close that position entirely. But yes, guys, this is it. I hope you guys enjoyed it. It was a bit long, but worth it to go over. And I hope you guys take this in consideration, go over the notes, go over this video, and you should be okay, right? Again, it takes balls to trade in this market. And of course, last but not least, please go over investing.com. You guys should have the site downloaded and go over the economic data. And of course, pay attention to cnbc.com, pay attention to the news, download Bloomberg and things of that nature. Okay. And just reading this on top of my head, this could be another reason bank stocks are having a problem right now because of crypto. It literally kind of like removed them from being the middleman that people has to go through to make transactions. Okay, and pay attention to the war thing on Ukraine and all those things. Pay attention to it. Last but not least, this is the stocks that I wanted to pay attention to. EPAM, right? It drops really, really low. Now I wanted to get in at 174, I didn't. Right now it's back at 300. But this is a technology stock, right? When it comes to cybersecurity. So I would pay attention to it, right? But usually whenever I move this big, anything crazy catalyst could bring it back down. But this would be a nice, pretty buying opportunity at 170 again. Okay, just keep that in mind. And this is on a quarterly basis. On a monthly basis, this is how it's looking like. We've seen a lot of buying that came in here. This could be a relief rally just to continuing the trend back down. And just Kasake from 600. So a lot of crazy shit may happen in this market. Excuse my French, but you need balls to trade in this market. So which means that you need to pay attention to some of these strategies and details that are being given out. Okay, so this is it. I'm gonna close here and I'll see you guys next time.